It's time now for today's strategy session. Inflation anxiety returning to Wall Street this week, but our next guest says despite the bad headlines, the price action is still strong. Joining us now, we've got Jay Woods, Freedom Capital Markets Chief Global Strategist. And Jay, I love the way you phrase this. The market's tough to read, but there are too many silver linings to ignore. What are the silver linings?
Yeah, the silver linings is price action. I mean, the headlines, the inflationary data makes us shake our heads and wonder exactly why we're staying at all-time highs. I think we were 3 points away from the S&P 500 closing at an all-time high yesterday. This is coming from someone that turned slightly near-term bearish at the end of December, seeing overall weakness. But when you look underneath the surface, the QQQE, which is the equal-weighted Nasdaq 100, we're up, we're at all-time new highs. The S&P equal-weighted is beating the S&P 500, which is market cap weighted. So we're seeing stocks rally, stocks that you don't talk about. No one's talking about AT&T at all-time new highs. Coke and McDonald's had great earnings on Monday, Tuesday, early this week. They're coming back. Disney, Starbucks, 52-week high. So there are some names that we've kind of forgotten because we're so focused on tech. But when you showed us that board earlier, all in Kelly Green except for technology, so a domination by Kelly Green, which is what Eagle fans like us.
It's out for this week.
Yeah, this is a parade day. It all works out. But the point is, technology, which tends to lead the market higher, is falling by the wayside, and you have every S&P select sector up for the year, but the ones that usually lead are not. Financials doing well, that is important to the market. So I don't see us running away here to the upside given the macro backdrop, but we're treading water, and that's not a bad thing as we go sideways for a little while.
I mean, the long Mag 7 trade is already so overcrowded. Is it possible that we're seeing now for investors that are looking for other areas of the market to find value and looking towards some of those household names that you just mentioned, looking at everything from telecoms that are going to be needed, looking at those little luxuries in your coffee that's needed, looking at some of the major stays in entertainment, i.e. a Disney, needed. All of those things considered, it seems like these staples are being redefined here a little bit.
Yeah, there was a lot of concern with the strong dollar, and now the dollar coming in a little bit will help the staples. But we're going back to some boring names, and there's been rotation under the surface. I was just talking to Josh Schaefer outside. 48% of the S&P 500 is beating the average. 48% of the stocks within it are beating the average, but we're focused on those that aren't, like the NVIDIAs and the Apples of the world. This Meta run has been fantastic, almost 20 days. So we're seeing a little rotation within the Mag 7. It's not hurting the market as much as we thought. Look at something like materials. Materials, no one talks about, but the tariff talk has helped them. They were beaten down. I was looking at it as more of a mean reversion, but then when I looked under the surface before I came on air, so I didn't prepare you guys with any notes, but the XLB has a lot to reverse. It's starting to look good. Its main stock, 20% of it is Lindy. LIN is the symbol there. A nice little inverted head and shoulders bottom perhaps forming, and then the third biggest weight, Ecolabs, ECL symbol there, breaking out to all-time highs. So there is a lot of strength within this sector that no one talks about materials, but we're seeing a broadening out. I don't think it's enough to take this market much, much higher. And if we get a bad report out of NVIDIA in a few weeks, the 26th, I believe, then we could see the market turn lower, but we'll still see rotation, just not into the names that are really making headlines.
But I think about a category like materials, and then even what you mentioned, equal weight, S&P, for example. Tariffs has to come to mind. Like, do tariffs and potential policy implications come into play as potential negatives?
Yeah, but right now tariffs are just a fear factor. It's not a reality that we're seeing. It's being used as a negotiation tactic. And to the point, I forget what analyst said it, but with the CPI and the PPI numbers increasing, inflationary numbers increasing, maybe that is backing us away from increasing tariffs, because that would just put more kerosene on that fire. And I know Trump watches the stock market, so we'll see what happens with tariffs. But tariffs are that headline that keep us watching the tape back and forth, but it hasn't happened. And maybe he's screaming fire a little too often, and we're just forget
The
about
market
it.
is really ignoring the tariffs thing. It's fascinating to me.
It was the biggest fear coming into this year. It's been the headline mover. Let's see how we act on Friday. Fridays have been really bad. People have taken risk off going into the weekend. I don't think we're about to run into this market on a Friday afternoon and make new highs, even though we're so close. But if we do end this day at new highs, that's a breakout. That could lead to a little more near-term momentum. But it is a head-scratching market when you look at the macro data, and then when I look at price action is telling me we're not done just yet.
Yeah.
But will we take that euphoric leg higher?
Right.
Yeah.
Not so much. But if you're going to be somewhere safe, I think financials are still the way to play it. There are a lot of good names in that sector.
We only got 30 seconds left here. Do you think AI exuberance still has more legs to it, especially hearing how companies like Alibaba want to capitalize on the boom?
Without a doubt. In Alibaba, you look at charts on a long-term basis. I think Jack Ma is coming out of the woodwork too. If that breaks above 120 earnings next week, that has a lot to reverse. So yes, AI is going to be a theme. You had a new IPO Pony, which is taking off, and then NVIDIA released their 13F, and they looked at different AI stocks that are moving as well. WeRide being the new one, Chinese autonomous driving. So it's going to move, but if you're trading these stocks, you got to be careful. Use stops. Be very on top of any trade you make with these AI stories that are, kind of smallish trades, if you will.
As Jay-Z once said, you could have been anywhere in the world, but you're here with us. We appreciate that, especially knowing you could have been at that Eagles parade today.
Not too late.
Thanks so much.
Right.
It's not too late.